Hi, Emery. How are you doing?
Hey, I'm good. How are you?
I'm good. Thanks so much for being with us. And as I was mentioning, you really do embody a lot of what we're hoping to bring into our programming across the board, not just on Bloomberg Television, but I think across all of our reporting. Before we get into some of the domestic and international issues at hand, I thought it would be interesting for the audience to get a sense of who Emery Brown is, because you have been at R&B for more than two decades?
Giving away my age.
I'm sorry,
yes.
I had to. But you haven't had quite a linear career, from my understanding. Can you just talk to us about what your career in finance has looked like?
Yes, so I always say that, I think that in your career you've got two choices. And most people, they talk about a career ladder. You get on the ladder and you kind of climb to the top. I always like to refer to it as a jungle gym. And the reason I said that is I made very specific choices along the way that influenced my career trajectory. And those choices were really driven by my curiosity and my desire to learn. So, and I think my career started in investment banking in the late 90s. I moved to Rand Merchant Bank in 2001. And at R&B, I actually fulfilled different roles. I would progress, and then I decided to go into a new field. And I spent 7 years in Cape Town. I came back to Johannesburg. And for me, what that did is it actually developed so many of what I think are important leadership qualities today. Courage, resilience, passion, making sure that you love what you do. Often I actually changed because I felt that I was in a role that I was not really loving what I'm doing. And, along with that, just having some fun. And I think through all of that, I achieved high performance. But the key thing, why I took a step back probably in the early, about 2010, is I was facing what I suppose many women in those years faced. And that was the fact that I decided I wanted to have children, and I was no longer happy with just being a career woman. And in those days, when I started in the late 90s, I was the only woman in investment banking in my team. I decided then, when I look around me, there are no women that are mothers in our investment banking client-facing teams. So I decided to resign. But after 6 months, I realized that I missed the industry, I missed the impact one can have in clients' worlds through being in investment banking, and I came back. And to me, those opportunities that I were afforded because I decided to follow a non-linear approach has really contributed to my leadership development. And if I look back at it, I always say to people, I saw my career as an adventure. And for me, an adventure is an attitude. It's in your mind. It's really seeking out, putting yourself intentionally in difficult position because it leads to growth. And that is how I see my career, and really how I feel today. I can demonstrate to so many women in R&B that you can actually be an investment banker. You can have a client-facing role and be a mother. And at the end of the day, you want to show the young women what is possible in our industry. And that to me is such an important part of having achieved the role that I do have today.
So the adventure is still continuing, is that what you would say?
Absolutely.
Can we talk about what you and your colleagues at R&B called this current moment for the continent, which you said the continent is at a crossroads?
Yes.
There's a lot of, I don't think a lot of people would have expected the certain uncertainty that the world and even Africa, South Africa is faced with going into G20. What does a crossroads look like for you?
Yes, I think that it's actually a publishing that we brought out recently. It is called A Continent at the Crossroads, and Africa's role in the world today and looking into the future, and really growth opportunities looking out over the next 10 years. And I think what this is all about is that Africa has been really impacted by so many political and policy developments, the decline in aid, and even the redirection of capital flows. So for me, it's really about the fact that the continent is redefining its growth trajectory by prioritizing sustainable development, it's looking at regional collaboration, and also the participation of the private sector to drive progress. And for us, that is really so important, that Africa has got so much potential that it offers to the world. I mean, there's some amazing statistics. For example, by 2030, the agriculture sector is going to be $1 trillion. By 2029, we have got the fastest growing population that uses the internet. By 2090, about 1.1 billion internet users. And all of those present opportunities for Africa. You can look at all the various sectors. And the crossroad is really about Africa embracing its potential and then partnering with each other on the continent and with the rest of the world to attract flows into the continent and for the rest of the world to play its part in unlocking the potential for Africa.
Has it changed the growth projections, though, for the bank in terms of the economies and the markets that you think perhaps have the most potential for increased capital flows? This current crossroads that we're at right now.
Absolutely. And I think that one can just see the opportunity that Africa presents to the banking sector by so many of the international banks, that the ones that are not on the continent really looking, like JP Morgan opening a rep office in Kenya. And for me, that just shows that everyone is buying into the opportunity that Africa presents. And even if I talk for us at Rand Merchant Bank, we definitely see that the rest of the continent offers significant growth opportunities, but also what is playing out in South Africa. I'm a South African at heart. People always say to me, why don't I go and work in any other country? And I said, because I love this country. And for me, the reforms that have played out, you can see in our medium-term budget speech by Minister Godongwane, there's really stability coming into South Africa. The outlook is positive. The S&P upgrade. For the first time in 2 decades, South Africa was upgraded, both us and Nigeria, off the FATF grey list. So I think that even in South Africa, the opportunity is big. Yes, the growth rate is not where we would like it to be, but it's low inflation, low interest rates, which is also makes South Africa an attractive investment opportunity. So I just think for corporate and investment banking, our role at the end of the day is to facilitate flows, capital, investment, trade flows in between different countries and into the continent. And we only see really big growth opportunities looking 10 years forth.
Is the momentum here, though, in South Africa, because there are still quite a bit of structural challenges, right, that many people point to. When you speak to clients, is there still a bit of concern that perhaps we're celebrating this too early and there's other parts of the continent that may be growing a bit faster? I wonder from your perspective. I know you're a South African at heart, but
I think Africa is an interesting continent. I mean, if you just think through the different countries, and the one thing for me that stands out about Africa is its resilience. You take the likes of Ghana. It really went through some tough times. Decisive action taken. Nigeria. All these countries just prove the resilience and that we are in a position to reflect and take the decisions to reset us on the growth path. So when it comes to South Africa, for me, we have really been working on reestablishing South Africa as an investment destination when President Ramaphosa in 2020 announced his economic reconstruction and recovery plan. And over all the time, there was really deliberate action. I think the execution was quite slow, but I would say it was new territory for South Africa. And I think just the progress, the S&P, the rating agencies, they recognize the reforms, what is playing out in South Africa. I mean, recently, our co-CEO of our institution segment went to the IMF and engaged with financial institutions. And there, it was also, the sentiment was very positive, and the view was that South Africa is now really, they believe, one of the most attractive emerging markets. You know, you can just look at what played out on our bond market. I mean, our 10-year yield dropped 230 basis points since May. Our stock exchange, our shares are up more than 50% in US dollar terms. Now, for me, that shows that the sentiment is really turning positive. And I mean, I was listening to the earlier interview. You know, everything's definitely not perfect in South Africa, but then where in the world is it? Even developed markets has got challenges. So it's really about just having the commitment to work through those challenges. Private and public partnership. For me, that is really the one thing in South Africa that has shifted significantly. You know, if you look at Transnet, another challenge, I think there's been something like 11 tenders awarded to the private sector. Our energy challenges. Now, if you can come from a background where we had a stage, we're talking about a complete blackout. I mean, that was a number of years ago. And really how the public and private sector has come together to solve the challenges. The changes that have been made at Eskom. Now, Dr. Ramakgopa is looking at transmission. So for me, you know, that is really what you want from an investment destination. And it's not just South Africa. You can see it across the continent. Right. Just where there are deliberate actions to change the trajectory of the country and its partnerships across public, the private sector, and with partners across the world.
And I think actually S&P cited Eskom and some of the improvements that we've seen with Eskom in their upgrade the other day. Can we talk about East Africa? Because it seems like there's a bit of a consensus amongst a lot of the banks here on the continent that there's real potential in East Africa. But I was reading that a Kenyan official was actually a bit concerned about some of the unrest that we saw in Tanzania, right, just a few weeks ago with the election. How does governance and maybe some of the concern around governance play into where you invest and how you think about growth markets?
Yes, for us, once we're in a market, we absolutely see us as being part of that country. I really think that is something that is important. You need to understand the country that you operate in. And in all of them, we do work with the governments to really see what role we can play as a financial institution to support them. You know, I think in everything that's playing out in Africa, the sovereigns need the financial institution to work with them, you know, for everything that they want to do. You know, I think what is playing out is we're seeing great opportunity for local financial markets to be developed, but the flows from the international markets are important. And again, that is where we as a corporate and investment bank play a role to make sure that we raise the hard currency. So I think that for a government of African countries, I don't think it's always easy, but I do think that we really have seen great examples of deliberate actions taken. I mean, Kenya, East Africa, I can't specifically comment on that, into Tanzania. But for me, it is the political will to do what's required for your country.
Would you still consider, are you still considering growth in East Africa and elsewhere?
We, as Rand Merchant Bank, as a corporate and investment bank, your footprint is important. I think we're seeing great growth in West, East, North, Southern Africa. I mean, you take a country like Namibia, who would have said 10 years ago that it was going to have this massive oil and gas discovery, which is going to put that country onto a different trajectory. So we are always looking at where do we need to be present, because at the end of the day, we are a business that serve our clients. And our clients are local corporates, they're multinational corporates, and also non-bank financial institutions. At the moment, we do have a rep office in Kenya, but we do look at East Africa and see how do we need to position ourselves to play into the opportunities in that part of Africa.
You've talked about JP Morgan a few times, I know, and you mentioned them earlier today, and you say that they have, you sort of, correct me if I'm wrong, you admire sort of the positions that they take across markets in Africa. What is it about that model that interests you, and is RMB maybe looking to replicate what we've seen from JPM?
Yes, listen, I do think that Jamie Dimon has done a phenomenal job with JP Morgan.
In Africa, or?
just in general, overall. So everyone always teases me in our group because they say he's my banking hero. I really just think what he has achieved for JP Morgan, and let me talk specifically about the corporate and investment banking part, because JP Morgan comes from a background of a strong investment bank, and they've really diversified into being a strong corporate bank. And now the next wave is embracing partnerships with fintechs, which is so important for banks to do, because it keeps you at the front, at the edge of innovation. You know, the years of where banks think they can do everything on their own, you know, that's no longer the case. And I just think that progressive thinking, and then also strategically about Africa, really thinking about where do they need to play in Africa, how do they play. So yes, definitely JP Morgan for me. There's lots of other great international banks, but I do think that Jamie Dimon has done really well.
Well, so what about that model? I mean, we have a chart up here just about digital payments. Do you see some of these fintech providers across the continent as supporting the business that traditional banks are doing? Do you see them as competition? How do you view them?
I think we see them as a bit of both.
Okay.
And it's no different than in the banking industry. We are counterparts, we are competitors, and sometimes even clients. And I think the rise of fintechs in Africa has really been something to marvel at. And it is because of the approach, I would say, of where there's been domestic challenges, and then just the role that fintechs can play in solving those. There's no doubt fintechs are incredibly nimble. It's not so easy for big banks to be so nimble. So we definitely see the rise. I mean, we recently saw the listing of Optasia on the JSE, and just testament to what that company has achieved in 32 markets, not just a couple in Africa. But we are even partnering with fintechs in, say, for example, our transactional banking space, because I think for banks it is important to just not focus on traditional banking services. It's really about focusing on value-added services. What are your client needs? And even if they are not your traditional banking services, how do you partner to meet those needs? Because the more you can do that, the more you can play a role in enabling your clients to deliver on their strategy, the more they'll decide to partner with you.
So then what does the banking industry in an ideal world look like in your mind in 5 years for the continent? Is it more digitization? Is it more mergers? What would you say? What would Emery say?
Definitely a lot more foreign direct investment. I think the investment of capital into Africa is critical to unlock its potential. As a bank and a corporate investment bank, that's a big role for us to play. Trade. I mean, the trade opportunity with all of the corridors, but also on the continent is another big growth opportunity. So I really see that, but it comes with, you need to be aware of the digital requirements of your clients and working with these fintechs. So I think it's actually a very exciting time for Africa, but also for the banking sector to play a significant role, partnering with governments, partnering with corporates, financial institutions to really see the African continent prosper.
Emery, let's just finish off with the G20, because that is why I think most of us are here. I mean, I live here, but most of us came into town this week. You said you're a South African at heart. I went this whole session without mentioning the U.S. president. I'm not going to mention him. I'm just saying that. But I do want to ask, what would be an optimal conclusion to the South African presidency for the G20? Next year, South Africa is handing it off to the U.S. As a South African, what do you want to see at the end of this week?
I think the streams that the G20 is focused on are really critical for the global economy. And for me, it is always important to have clear actions and then to execute. I think I recently read a great post on LinkedIn, and it's about this thing, that you can have the best plans, and they all look fantastic on PowerPoint presentations and on whiteboards, but it's actually about execution. And I think what I've seen is that there are tangible actions to be taken, really reinforcing this partnership between the private sector and the public sector, between countries across the world. But to me, it's really about going away from here and all working together in excellence in execution.
So it doesn't necessarily need to be a communique with the leaders?
Not have to be?
A communique, a joint declaration from the leaders? Is it more about the business sector coming together across the various countries that are here?
With the public sector. But I think that just showing unity and a common goal that we are all working towards, I think that would really be a great outcome with some tangible plans that we can go and execute on.
All right, we'll wait to see how that plays out. Emery Brown, CEO of Rand Merchant Bank, thank you so much for joining us.